Ever get tricked by those too good to be true deals?
Haha. Yeah, like those buy one, get 10 free offers.
Exactly. Well, the same thing can happen in trading, especially when you're looking at the order book. What looks like a steal might be a mirage.
Ah, those tricky order books.
Today, let's dive into some real trader wisdom about something called liquidity clusters and why they're not always what they seem. Think of it like this. You're looking at the order book and you see these massive walls of buy or sell orders.
Like a fortress protecting a certain price level.
Yeah, exactly. Those are our liquidity clusters. They can make it look like the price has strong support or resistance.
Right, like a line in the sand that everyone's watching.
But here's the catch. Just because a price level looks strong doesn't mean it actually is.
It's like seeing a traffic jam up ahead. Doesn't tell you if it's a fender bender or a 10-car pileup.
Okay, so how do we figure out if that price lever is the real deal or just a mirage?
We need more context, and that's where trading volume comes into play. All right, volume. Let's break that down because I feel like we hear it everywhere in trading. In this case, what's it all about?
Basically, volume tells us how much buying or selling is actually happening at that price level. Think of it like this. A big order with very little volume is like a house of cards.
Okay, so it's not just about the size of the order, it's about the force behind it.
Exactly. It's the difference between a gentle breeze and a hurricane. One's going to have a lot more impact than the other.
Right. Our source puts it this way. Imagine a big sell order hanging above the current price, like a wall, right? If we only see a trickle of buy orders coming in, that's a low volume. The price is probably going to slice right through that wall like it's nothing.
But on the flip side, if we see a ton of buying volume slamming into that same wall and the price is stuck, barely budging, well, that tells a different story. That means there's some serious selling pressure happening.
It's like that big order, that wall is a seawall. Low volume is like a small wave, might just wash over. But high volume, that's a tsunami. That seawall might hold up, or that wave could completely obliterate it.
And that's what makes it so important to watch.
So how does knowing this help us if we're, say, not glued to the order book every second of the day?
Because it gives you context. Whether you're looking at stocks, crypto, whatever, understanding these dynamics helps you read the market's mood, see beyond those surface-level movements.
It's like having a secret decoder ring. Now, we've talked about order size and volume. Are there any other clues within the order book itself, like the speed at which orders are placed or canceled, that could give us even more insights?
Interesting question. It's definitely something to think about.
Yeah. It seems like the order book can be a powerful tool if you know how to read it.
Absolutely. And just like with any tool, understanding its nuances can make all the difference.
Great stuff. Really appreciate those insights.
My pleasure. Always happy to talk shop.
Until next time, happy trading, everyone. And remember, don't trust everything you see, especially on the order book.